What's up, everybody? Thanks for joining me on these analysis. We're going to be looking at AMD stock today. So as you can see, we had two trend lines going. We had this slightly steep trend line going downward, and now we have this very steep trend line going down that we've been respecting time after time again. And it looks like we got to push down further. So I know it's been a tough time to be an AMD holder. This thing's been bleeding out tremendously, but I do think if you hold it and you have enough patience and you continue to DCA, I think you'll be okay. I think even if you bought at the top, eventually you will make your money back. Eventually, you just have to be very patient and give it some years. DCA to bring your average cost down and kind of just ride it out. I'm sure semiconductors will have their run up eventually. All semiconductors have been getting slaughtered. You can take a look at the index here, SOXX. It's been getting absolutely killed. So you can see as an index, it's been down 36%. So AMD is not the only one that's feeling it. So I wouldn't lose hope just yet. We did break this initial support zone, acting as resistance, got a strong bounce off of it. And now we made it to our next target that we talked about in the first AMD video that we made. And we made it to this zone, got a bounce off of this zone, showing that it was support. And now it's acting as resistance as we fell through along with this trend line, pushing downward. And now our next target is looking at around $87 to about $86. So we'll see how it plays out, of course. The sentiment has been extremely bearish for an extended period of time now. I'm going to draw out the next zone after that one. So if we were to fall through here, when we get a close, we would retest this zone potentially and then make our way down to 75. But I think these are good accumulation zones, not financial advice. But I do think AMD will have a nice turnaround. When you take a look on a very, very large scale and you pull a Fibonacci retracement, and you go from here to the top, we're right there at the golden zone, the 0.5 to the 618, which we respected previously. We've had a bounce off of it. We fell underneath it. It was resistance, support, and now it could be support here, but we could also fall underneath it, break under, get a retest, and push down lower. We'll see how that plays out. And if we pull to a lower zone on a smaller time frame, we'll pull it to this one here, and we zoom in, you can see we are at the 786. So we'll see how it plays out, of course. We definitely don't want to lose the 786, because once you get to the 786, it's going to show that the bears are stronger than the bulls, and that this rally could be completely washed away. So we definitely don't want to see that. But yeah, you always want to hold above the 618 and higher. The higher the lines are, the stronger the move is, and the more intact the bulls are in pushing the price up. But we've lost that momentum a while back, and if we push to the 886, it's even worse. And then if we obviously go down to the 1, then this whole move is washed away completely. But I think if you do stay long-term focused, that you'll be okay if you dollar cost average into it. On the SMAs, we're underneath all three. We just got a strong bounce off of the 200 week, which is not a good sign, and the 50. We're almost getting kind of a death cross where the 20, so a smaller time frame moving average is crossing in a bearish way on a larger moving average. So the 20 crossing the 200 is considered a death cross, which is a very bearish sign. And then to the flip side, you have a golden cross where you have the lower time frames crossing the higher time frames, as you can see here, and we got a strong move up. So this is a golden cross. This is going to be a bearish cross, as this happens on the weekly. On the daily, we're underneath all three. Just got to bounce off of the 20-day, and we're just pushing down lower and lower, just absolutely bleeding out. We're at the We're at the green band now at the bottom. Let's see if we get a bounce up to the blue, but we could potentially just continue to hug it how we've done here recently. On the weekly, the same thing. We've just been hugging the green band, the bottom band, for a majority of the time in this most recent downturn. As you can see, these downturns, they hug the green band tremendously and then hug the red band on the ride up. So we don't really spend too much time at the blue. We're just spending all of our time on the outer bands, either the red or the green. So it's like oversold, overbought. It's pretty much how AMD works all the time. So this is part of its movement, unfortunately. So to hold the stock like this, you definitely need to be able to stomach volatility. On the RSI, we're absolutely oversold, as you could imagine. On the weekly, we're pushing towards 30. So let's see if we get a bounce there. Let's see what the last time we touched 30 was. It was about 2015, so about 10 years ago. And prior to that was 2012 and one time in 2014. So it doesn't happen too often. And we're headed towards oversold territory as well here. So these could be great opportunities to stack up, get your discount while you can. If you liked AMD at the top, then you should love it right now. It's cheaper than ever. But you have to just switch your mindset to that investing mindset, the long-term mindset. If you have a trading mindset, then this is going to crush you. So let's see. We tried making a push up, but it looks like we're starting to fail down, and we're starting to get some green candles being built on this MACD here on the daily. We just got our first red candle, and the blue line fell underneath the orange, which is a moving average. So it's not a good sign, but it can always turn back around. As you can see here, it's been very indecisive, pushing up, then going down, pushing up, going sideways, and back down. So we'll see how it plays out, of course. On the weekly, extremely bearish. We haven't had that turnaround yet. We did try curling here, and then it failed, and now it looks like it's continuing down. But the volume is decreasing, which is a good sign. The bearish volume is decreasing, which is what you want to see. Because we want to see something where the bearish volume decreases, and then eventually we start getting those green candles forming upward. So that is on the right track. Maybe these moves are getting weaker in terms of volume. Price is still going down, but in terms of volume, which is a good sign that maybe we could get a potential reversal sooner than later. Overall, though, I do think it's a buy. I know it's hard to imagine right now, but I think if you have the long-term investing mindset and you're not here to swing trade over the next couple months or a year, I think if you hold it for 3 to 5 years, you could make some good money here. If we were to make it to all-time highs, that would be a 140% move. And from all-time highs, we have dropped a total of almost 60%. We're at 58%. Like I said, if you were buying it at 226 and you were saying it's an amazing company, then I don't see why you wouldn't be buying it here at 90. You guys let me know in the comment section what you think about AMD. Is it advanced money destroyer, or is it just AMD? So I'll see you guys in the next one.